Hi, you probably heard the saying, it's not what we do every now and then that creates the successes in our lives. It's what we do consistently, day in and day out. And so with that in mind, being a trader, I think it's important for me to make you understand that trading is not a question of coming into work and then expecting to miraculously be handed a fantastic setup right just because it suits us. The trading day can actually be a long and arduous test of our patience. But if you do possess the patience, you will be richly rewarded for the patience. But of course, you also need to know the setups. So with that in mind, I wanted to take you through some of the setups from today. So um, the first setup that I would like, let me just hide my face here. The first setup is from gold. I thought it was an interesting setup because what you're seeing here is a 5-minute chart. And this is essentially just a simple trend line that touches a low combined with a low on the further down on this slide here in gold from 1760. And then down here we get what I call this a channel. It's a bear channel, but down here we have an overshoot on the bear channel. You could also probably spot that we have a low over here, but bear in mind that this is gold close up on a 5-minute chart. So if you want to be on the certain side, it's a good idea to scale out and take a look at what's the larger time frame doing. Because when we look at the larger time frame, we get what is much needed when we're dealing with price action, and that's perspective. What I do like about what we're doing here in the Telegram group is that we're not just doing after the fact. These are actual trades that are posted in real time. So it gives also that credibility to it rather than just being a teacher and a mentor who said after the fact, this is where you should have bought and this is where you should have gotten that out. Because in hindsight, we're all perfect traders, but being subjected to the pressure in real time is a very different proposition to, sitting doing it after the fact. If you look at the hourly chart, you will very quickly see that we have what's considered a downtrend, but this could look like a bear channel. But until this bear channel is actually broken, there's a good indication that we do have support down here. So that gives this signal down here much more of validity. And so the low that you're seeing down here on the 5-minute chart is this low that you're seeing down here on the hourly chart. If we then move on to the next chart, you will then see what happened subsequently after the trade was announced. But whether it had been a winning trade or losing trade, I guess is not really the important point for me to illustrate here. The important point for me to illustrate is that we could have bought the gold around this area here, and then we could have had a stop loss down here. And at a bare minimum, we probably would have expected gold to go up to the next immediate counter reaction, which subsequently it actually did. And I took a screenshot of it that the gold trade was announced around 1748, and here there's a good $8 or so profit. That was the first trade. But as you can probably imagine, if I go back to this chart here, and I again remove my image here, this is not just a question of identifying a low. This is a question of being patient. 1 bar, 2 bars, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, so we're talking about a pattern here that takes a good couple of hours to unfold. And, if I was silent for 10 seconds, it's a long time to wait, isn't it? And in there lies the true secret of trading success: patience and knowledge. And then when the right setup materializes, then you have the conviction to actually execute and do what you have to do. Right. Let's take another trade. This trade I am particularly pleased with, and it was with the help of my friend and fellow trader Casper. So we identified a setup in Euro Yen here on the 15-minute chart. We're writing here that there's a standby for a long trade in euro yen, but we're just waiting for a signal bar. So what exactly is it that we're waiting for? What is a signal bar? Well, a signal bar is essentially the time when you get the confirmation of what you had been expecting. So in the gold chart that we saw a moment ago, the signal bar came the moment that that low bar, you know, the bar that went all the way down and then went spiked back up again, the moment this high had been exceeded, that the low bar was the signal bar because I had circled it. You can go back in the video and watch this. But the moment we then begin to trade above it, sometimes close above it, but sometimes it's just enough that we want it to trade above that low bar's high. That's the signal bar, and then we're getting the confirmation bar. So here, we're just waiting for a signal bar. And down here, we got the signal down here. So now we're just waiting for the market to actually build momentum. And we're seeing that about 5 minutes later. If you're looking at the timestamp, you'll see that we're buying it at 129.51 with a modest stop loss of about 15, 16 points. What we're really doing here is this is a broad channel, it's a broad bull channel, but it should really be treated as a trading range. If you then look at the next chart here, we're zooming out, still on a 15-minute chart, but it gives a rather different perspective. So what we've done here is we've drawn a trend line up here, and then we've copied that trend line down here and projected it onto this low here. And that gives us what you saw in the gold market as well, of what I call an overshoot. And once you then get the overshoot, and the market then begins to trade back into the range, that is your buy signal. Now, let me try and give this from a different perspective. So this is what happened. We bought euro yen down here, and about here we took profit. We probably could have been a little bit more patient. The market actually went 129.90, but we started taking profit around 29.85 because the target will always be the top end of the range because, hey, that's the hallmark of a trading channel or a trading range is that, you know, when the market looks most negative, we actually begin to buy because it's a trading range. And when the market all of a sudden looks rosy, i.e. the top of the trading range, we sell short. But there is a different way that we could have attacked this chart here, and I wanted to show you that. Just because the more tools that we have, the more certain we can also, and the more certain we have, the more with more conviction we can trade. Because when we trade with conviction, we trade with a certain sense of aggressiveness. We trade with confidence, and when we are confident, we're not so, you know, thrown out of kilt if it doesn't turn out to be a positive trade. So going back here, this is the raw chart again, but it's using a different charting package. What you're seeing here is the line that you saw copied before. What you're not seeing here, what you're seeing here that you didn't see on the other chart, is just when the market opened, this particular charting package, which is eSignal, had a spike down. You didn't see that on the other charting package. That sometimes happens in the FX market when the market opens on a Sunday night. Okay, so you still have this overshoot here, but there is another way that we could identify this area. These red lines that you're seeing here is what I call harmonics. And I spend a lot of time teaching about harmonics, but also trading with harmonics, because I feel that the market is essentially a marketplace of reoccurring patterns, a reoccurring events driven by the human behavior, which is the building, the fuel behind the markets moving up and down. What you often see is that we as human beings are creatures of habit. So by drawing a simple line from the top to the low and then copying that line here over to this area here, you have essentially identified an area of support. If you then can combine that area of support using the harmonic lines with other tools that I've already shown you here, well, then you have so much more conviction. And with conviction, well, as I said, with conviction comes confidence of trade. I think that's it. Yes, that's it. So that's all for me now. I'm just holding this less than 10 minutes. I hope that you enjoyed this little brief of what trades were interesting on the 27th of September 2021. See you soon. Bye-bye.